Hello, I'm Eric Zaunscherb, Chair of the Board of Directors of Critical Elements Lithium Corporation, ticker CRE on the TSX Venture. We intend to develop the Rose lithium-tantalum mine and concentrator in the James Bay region of Quebec. The project benefits from high purity, excellent metallurgy, attractive, robust economics, and immediate proximity to the essential road access and power lines. In addition, we have permitting green light from the federal government in Canada, and we believe that we're nearing completion of the Quebec permitting process.
Eric.
There's a recognition.
Oh, sorry, Eric, I thought you finished. I'm going to interrupt you anyway, because I want to be able to ask some questions. Eric, first of all,
Sure.
Lovely to see you. It's been far too long. I think we're back in the beginning of August when we last saw you. But I wanted to catch up. Okay, you're going to be asked the same dreaded question you probably get asked every single day. But first of all, I'm going to start with, you raised some money. Market did not like it. You raised at a premium and the market did not like it. What's your version of what's happened there? Because your share price dropped like a stone.
Indeed. Well, we talked about this in August at our last discussion, and we said that we would be opportunistic. As you said, the potential for G&A and so on and so forth, strategic initiatives would require additional financing. But what I did say was it's not going to happen at $1.18. So when instead it did happen is at $1.75 per unit. It's up 48% from that level. We raised $30 million. And from our perspective, management board agreed that it was prudent to have a cushion. You never know when you're going to get another COVID variant or a war in Ukraine or who knows, whatever thing is going to happen. But the reality is that it's prudent to have that money. Secondly, it's really important to have money in your jeans when you're sitting across the table from strategic investors. That's essential. If they believe you're on fumes and nothing's going to happen, then that really puts you at a disadvantage. And then finally, we have a number of things that we want to accomplish. And if one looks into the prospectus, there is a clear outline of what we want to accomplish, $10 million on front-end engineering design, detailed design for the mill, for the phase one of the project. It's another $6 million for infrastructure, front-end engineering design, and detailed engineering. So we have some strategic things that we want to accomplish. The $30 million was necessary, in our opinion. Obviously, the market disliked it, as you mentioned it. But I do note that, yes, we were off significantly, but to be honest, so was the sector. If you look at the global LIT, the ETF, that is off dramatically and has not yet recovered from that early November high. If you look at valuations, and I track them very carefully, if you look at enterprise value per ton in the ground on a global basis, we nailed the peak there. So it's not like there was any momentum stolen there. I think it's a good thing that we did. In the meantime, my heart bleeds as a shareholder. I'm very, very unhappy for the shareholders that might have lost money at that point in time.
And you've done a half warrant as well at 250. If things were different, you probably wouldn't have had to have done that. But let's go straight to the question everyone's talking about, which is timing of permit. When we first spoke February, you said it was going to come by hopefully August. It didn't. August came and went, and you're still waiting. So is there a fundamental underlying issue with the permitting process for you? Is there something that we need to be aware of?
It's a very important question. We spoke early August, and about, I believe it was a week after we spoke, we got the green light on the federal level. So the Canadian responsible minister gave us the green light to go ahead. So that was as we expected. The beauty is that in the federal process, you have a legislated timeline. And apart from a 3-month extension that we agreed to due to COVID, the feds kept to that. Now, in Quebec, there is no legislated timeline. It's quite normal when you look at other projects that have gone through this process to see 4 or 5 rounds of questions and answers. And we've been diligent in responding to those questions. It's normal to move forward after 4 or 5 rounds. We have now completed the 5th round, and hopefully that means that near term, we will be completing the Quebec permitting process. Now, we can be frustrated by that process and the time that it takes, but at the end of the day, you get permitted in Quebec, you move forward, and it stays in that status. It's not like Serbia where they can pull your license on you, as Rio Tinto has just found. It's a government that is stable. It's not like a left-leaning government has just been elected, as in Chile, and they're talking about further nationalization of lithium production going forward. It's not like Mexico that's bringing Bolivia, of all countries, in to discuss how to produce lithium. So I think that we should all be very comfortable with Quebec as one of the top tier mining jurisdictions globally.
I am, and we've done a whole show on the unfair advantage that Quebec mining companies have by being in the province of Quebec. So I do understand it, but I'm also cognizant that Canada, which likes to put itself up as a tier one jurisdiction, does have its own issues, First Nations and otherwise, with getting mining projects running to time, right? And you have not been able to call the speed at which the permit would come through. So is it a case of if not when, or can you not even commit to that?
In my opinion, it's a matter of when, not if. Looking at the questions that have been asked and the answers that have been provided, I don't see any yellow or red flags there. It's simply a matter of those people going through the process. And if it takes another day, another week, another month, I'm not overly concerned. Once it happens, then we'll be able to move forward. And discussions with the strategic parties that are out there that have been going on for years will hopefully come to a swift conclusion, and we'll be able to move forward. If we're talking about raising $425 million Canadian for phase one alone, that's a significant amount of investment that is ready to be unleashed in this excellent province, and we're excited about doing just that.
Right. Okay. So let's pop back a bit. So obviously the market's perhaps getting over the raise, the quantum of the raise, the price of the raise, or whatever it is that people had initial problems with, which is good news. But the other good news in this is you were able to raise $30 million. So who's and I saw the consortium of institutions who raised that money for you, but what sort of money is it? Is it more institutional money? And if so, what did they need to hear from you to give them the confidence that this thing's going to move forward in a timely fashion and you're not going to burn your way through $30 million waiting around for the permit?
No, great question. No, part of the reason for doing a prospectus offering as opposed to a traditional private placement with a 4-month hold is that one is able to expand the institutional shareholder base. As I'm sure you know, a 4-month hold is not something that appeals in the United States or other jurisdictions. It's largely a Canadian feature. And so what we wanted to do was prepare the market for the future, for when we do provide the funds for project financing, raise those funds, and then we will be able to work directly with some of those institutions that have come on board or wanted to get on board in this deal and weren't able to get in.
So tell me this. I mean, you've got two big names on the board. We talked about them last time out. You've got Stefan Haber and Marcus Brunn, who I've not seen hide nor hair of, but I'm assuming they were sitting in these institutional meetings talking about the money side of things, which must have lent credibility given they sold their project at Albemarle for $6.2 billion. That's great comfort to as a former banker. That would lend me great comfort. But what was it that the investors wanted to hear from those guys about their experience, about what they see in front of them? Because the fundamentals of the project haven't changed. Right? Nothing's gone away, fallen away. It's just this waiting period. What were those conversations like?
Well, when you're talking to a strategic partner or potential investor on the other side of the table, it's essential to have people like Stefan and Marcus on your side of the table that have more than 10 years experience running a multi-billion-dollar company in the lithium industry. I'm very grateful that they're there. And although that's not something you can put into a news release, it's essential in these very complex discussions with potential off-takers. And that's exactly what the institutional investors want to see. So if I put my analyst hat back on from the days on the street, If I had a company coming in with a really lovely lithium exploration project, that's one side of the equation. But you really want to see people on management and the board that have been there and done that in the lithium industry specifically. It's not gold, it's not copper. It's a very complex industry,
right,
both on the marketing side, technical side.
Right. So, right, exactly. And I guess what I'm trying to get at is say, because we've not heard much from you. You've been really quiet, super quiet, right? So it's hard to know what you're thinking, what's actually going on. Just that it's the bare minimum of news releases. Is in those conversations with people who stumped up $30 million, they obviously heard the things that they need to hear. How do I translate that into the world of retail investors who perhaps are a little bit disconcerted, or family offices who are a little bit disconcerted with what they've seen so far? What would you say to that audience?
Yeah. Well, to be clear, did we do marketing, institutional marketing? Yes, we spoke to over 100 institutions. Did they hear anything that anyone else didn't hear? Absolutely not. We have a lot of regulatory eyes on us, and there's no way we're doing anything in terms of unequal disclosure to anyone. So they didn't hear anything different. But what they did hear was the quality of management, the quality of the project. They hear about what the progress has been. They know that permitting is not something that's here yesterday. It's something that's to come. So that's really important. I really want to emphasize that. Those institutions are now on board, the ones that participated, and we hope to expand that. And one way we're going to expand that is the fact that we hired Patrick Laperriere, who is a Montreal-based capital markets specialist, who's been around the institutional game for a long time, and he's been designing the investor relations program to be launched. Now, obviously, there hasn't been much to say because, for one thing, negotiations, strategic such are private. There's no way we're going to be news releasing who we're talking to and who CAs have been signed with and who's rummaging around in the data room. But they are ongoing. Once the permit is in, that's an important catalyst. If we are demanding institutions or strategics to invest along with the investors, in other words, no offtake without investment, if we're demanding that, then why would we do a deal like that, selling part of the company or the project at these lower levels when we believe there's a re-rating that could happen along with permitting? So that's a matter of timing. There's a strategic reason for that. Once that happens, that's when we can start talking a lot more volubly about what is happening on the strategic basis. Okay,
so that's a really important point, right? Is the fact that there hasn't been many announcements and the fact you haven't got your permits doesn't mean you've been sitting idly twiddling your thumbs. The conversations have still been happening with strategics and others. And that when, I'm saying when, right? The permit arrives, you can accelerate into the process which you presumably have already got down on paper and know what you're going to be doing. There's going to be no ramp up period required.
That's correct.
Okay.
Now, as we've talked about before, there are a lot of potential counterparties there. You've got the OEMs that are trying to lock in spodumene concentrate and lithium hydroxide for the future. You've got battery manufacturers doing the same thing. You've got mining companies that either are or want to get into the game of lithium. You've got oil and gas companies that have their renewable divisions, private equity companies that just want to invest. So there's an awful lot of potential counterparties to this. And obviously we have to go through and identify what is the best route for the company and its shareholders.
You do, but you've had a lot of time to do that. I know that's subject to whatever the counterparty wants to talk to you about. But we've seen in other, and we're going to more broadly use the battery metal equities, get MOUs in place. The OEMs seem to want to tie that down. People along that food chain want to tie, subject to MOUs or LOIs in place, and we've not heard anything of that from you. Is that because the counterparties don't do that they don't want to do that with you, or is that because you're just very early in the conversation?
Some of the more acerbic observers in our industry tend to view MOUs and LOIs as not worth the paper they're written on.
Well, I do too, and again, we've done shows on that. We've written about it, so I agree with you. But it's a good marker and indicator for retail and others to say this is our chance to tell you that the conversations are happening, and subject to us delivering and performing, there's an offtake here, there's a strategic investment here. So
you're saying it's promotion then?
I am saying it's promotion, and I've seen it elsewhere as promotion. So I'm not saying necessarily I as a former banker, I'm going to be a buyer of that's definitely happening, but it's an indication of what could be.
Right. To me, there's two kinds of promotion. There's the good kind and the bad kind. The good kind is the kind that you don't have to go back to the market and say, sorry, but we didn't actually mean that, or we shouldn't have said that, or the regulators have told us that we shouldn't have said that. Good promotion is, of course, necessary. We need to tell what's going on. I definitely do not want to see us retract things. To me, if we say that XYZ has invested in the company, they've bought a certain percentage of the company or a certain percentage of the project, and they have offtake, that to me is a much, much stronger signal to the market than an MOU with a company that you can't pronounce and have never heard of.
I think we're in violent agreement over that one. So let me go through the sort of tick list of things that I may be, or investors may be worried about, so we can either discount them or have to have another further conversation. Please. Okay, so obviously First Nations, I mentioned them earlier. I saw a press release. You seem to be getting on fine with them. Any hurdles or bumps that need to be overcome and that we need to be aware of?
The Picatao Agreement, which is our impact benefits agreement with the Cree nations, the Cree Grand Council, was signed in 2019. That's a relationship that is very strong. It's been very difficult through COVID when communities have shut themselves off rightly to prevent illness. By now, we would have spent an awful lot more time up there. But the reality is money's already started to flow under that IBA, under the Picatao Agreement. And we've already been having discussions about training and education. There's a really cool aquaculture program to reestablish sturgeon region. In other words, the relationship is formalized. It's strong, it's positive. And I think that's another thing that one can say differentiates the company from many of the others that are out there talking. I regularly see news releases from other companies in the region, how they're going to be starting construction near term. And yet they're nowhere in terms of signing an IBA, or they're nowhere in terms of concluding the permitting process. This all speaks to a very important point, and that is that the OEMs in particular at the pinnacle, the apex predator, if you will, in this particular system, they somehow have the view that lithium can be brought into the market in the snap of a finger, whether that's 5 years or 3 years or 8 years, who knows. Reality is that the process to get lithium from discovery into the market and qualified, just alone the qualification period is 18 to 24 months. That takes you well over 10 years. Now, there's been some that have expressed the idea that the mining sector has disappointed them in how quickly that they've brought in lithium into the market. It can be done quickly, but it might not stay open. The reality is new technologies like some of the recycling technologies that are going on, or direct lithium extraction from well field or geothermal brines. These are all beautiful. They're all elegant solutions to this problem, and they're painted a lovely shade of green. But the reality is they're going to take a while to be brought to commercialization. And in that gap, that 5 to 10 year gap, conventional mine and brine are what's needed in the lithium sector. We're going to need all the lithium units we can get to ensure that the companies that want to produce 40, then 60, then 80, then 100% of their brands in electric vehicles, those are needed. And that's going to take a lot of money and a lot of time to achieve.
It is. Let me go through my list, because I need to kind of break this down, right? So you've talked about raising $30 million, and you've allocated that. And maybe phase one is all about spodumene, phase two, lithium hydroxide, right? So with regards to the technical aspects of phase one, have you done as much as you need to do? It's a simple hard rock lithium project. So how much of the 30 million is going to be allocated to, closing out the kind of technical understanding?
First of all, there's no such thing as a simple project. They all have their unique challenges. Otherwise, mining companies would be delivering their projects perfectly on time, on schedule, and performing perfectly. Nonetheless, we're going to do our best to make sure that happens. Of the 30 million, 10 million's been allocated for the front-end engineering design and detailed design for the mill. Another 6 for the infrastructure. Another 1 or so for the open pit and waste. We're hiring around $1.5 million for the owner's team to move forward. So, probably something close to the 20 would be the right number. In the meantime, there's G&A. We burn about $250,000 a month on average for over the last year. And, we'd love to see some other things that happen. In the meantime, you've got engineering for the second phase, which is chemical plant. WSP and Metso Autotech have been hired to do that, are working on that, are completing some second round pilot work that get together the details needed for long-term lead item orders and things like that. That is all coming to a head. So we're in a rush. We'd like to get those technical details out. Why? Because right now we're trading at around 0.4 times NAV from phase one alone. If you look at Canaccord Genuity's global coverage, the average is at around 1 times NAV. So there's a big discount there that we want to address. In addition, that doesn't include yet the NAV from phase two. There's no certainty, since we haven't delivered the engineering study for phase two. There's no certainty that phase two will happen, but we hope that there will be a very nice, economically robust project that comes out of there, and that the economic details will then come into the market as well.
And are you going to have to relook at any of this in the sense that you obviously a lot of conversations we're saying of last year around inflation, transitory or otherwise, shipping costs, delays, all of these supply chain issues. How's that affecting the numbers that you've previously put out?
Well, we have not published a revised feasibility study. That's a possibility, given that we have money raised now and in the bank. At the same time, the feasibility study from November 2017 is valid. And if you look at the sensitivity tables in that 2017, you look at a 20% CapEx inflation, which I think is a pretty darn conservative. That corresponds to an 8% decline in after-tax NAV. Okay. Conversely, you look at the study that the James Bay project was just published in the beginning of January. They use $1,000 per ton US on spodumene concentrate. We used $750 for chemical grade and $1,500 for technical grade. And if you add 20% to the baseline spodumene concentrate pricing that we used in the November 2017, that equates to a 41% increase in NAV based on the sensitivity table in that feasibility study. So those people that want to see an updated feasibility just need to take a look at the sensitivity tables in that published feasibility study.
Okay, we will do that for sure. So it's funny, yeah. I mean, the obviously lithium price did exceptionally well last year, and I think at the moment so did lithium equities. But this currently seems to be a sort of disconnect in the equities market across the board.
And I think an important reason for that is that people have to realize that when they see a massive increase in spot lithium carbonate in China, that is such a small fraction of the total market. So much more of the market transacts on a contract basis.
Yeah.
A better way to look at it is the benchmark Mineral Intelligence Lithium Index, which is up around 400% over the year through 2021. That is more of a realized price sort of thing. If you look at Pilbara's sales, their auctions, they're getting over $2,500 a ton for spodumene concentrate. That's wonderful, but there's no way contracts are being done at that level. So again, if you see somebody like Alchem putting out the James Bay feasibility study, they have sort of a long-term price of around $1,000 per ton. That's more conservative and certainly something that is more acceptable to institutional investors and regulators.
And what about
I would love to see if someone put out a feasibility study at $25 a ton. That would be fun.
Someone will. You know it. All sorts in this industry. And with regards to any conversations with regards to the CapEx component, I guess they're on hold at the moment. People just because you've talked as much as you can, presumably, and you're just waiting for this permit.
Well, I mean, if you look at it, there's all kinds of studies being done in the background that are looking at CapEx and alternative ways of doing things, ways of improving the carbon footprint of the mine. We currently have an electric shovel, and we have diesel hauling trucks out of the pit. At this point in time, there are no really good electric solutions to that. But just speculating, throw it out there. What if one used hydrogen-fueled trucks? There's all kinds of things that can be done, trade-off studies that are being done on an engineering basis, detailed engineering basis. And stay tuned.
Yeah, no, the reason I ask is this, because at this phase, so where you are today, traditionally, it's a case of, just polishing here and there, and you're kind of getting a few percentage points here and there. And it doesn't really amount to a huge bunch, a whole hill of beans, quite frankly, usually. But there's, in this kind of ESG frenzy we're seeing with the funds desperate to rebrand themselves, ESG, whatever name, and this the green movement and greenification of a lot of the conversations, let alone the companies. You guys in the battery metal space are probably better positioned to take advantage of all of this money, which seems to be desperate to allocate to green projects. So has the money, or do you feel the money could be cheaper for you now?
Absolutely. The ESG component is extremely important, which means there's an extreme opportunity for those people that are so inclined to greenwash. Take a look at the financing of Nemaska that was done using Nordic bonds at 11.25%, and contrast that with Sigma that did green bonds at LIBOR +5. So there's a huge difference if you can position the project legitimately as being ESG friendly. Now, from our perspective, one of the observers of this industry basically said this is the opportunity of a lifetime for Canada, and specifically Quebec, to take advantage of hydroelectric power. 93% of the grid in Quebec is hydroelectric. And we have a neighbor right next door who is absolutely hungry for battery material. So there's a fantastic opportunity. We'd like to position ourselves from an environmentally positive perspective. We are far from being there yet, but we are going to use natural advantages to the best of our ability as uncovered through our detailed engineering. From a governance perspective, we embarked last year on a series of workshops to improve our governance. And then we were blessed to have Ani Markova, a well-known Toronto portfolio manager now fully engaged in ESG, join us on the board. So Critical Elements is on this journey to improve itself from an ESG perspective. So much more we can do. We're not there yet, but we are going to go in that direction.
Okay, Eric. I mean, I've covered a few topics there, and perhaps we need to leave something on the table for the next time we speak. But you're
hopefully next time we speak, there'll be a Quebec permit in hand.
Well,
and strategic discussions will have been had and concluded.
Let's hope that's soon. I think we both want that to be quite soon. But it'll get there. It's just a question of the process that you've got to go through. Like, as I say, like, I appreciate your time today, going through, where you're at and talking to us. Stay in touch and let us know, how you're progressing. And I look forward to speaking to you soon.
It's a real pleasure speaking with you as always.